The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We have a CPI number, softer numbers than the market was anticipating. Core inflation, the number they're focusing on, slowing to 3.2% in December. We'll get into those details in a moment, but nonetheless, you have markets reacting as inflation not as worrisome as you may imagine before 8:30. That's the sentiment, at least. We have equities trading higher. We have yields pulling back a bit. We'll jump over to the dollar, but you kick it off with the S&Ps up by 87 points or 1.5%. Yeah, and that's basically, you were coming into that number positive by about 20 points, and we've accelerated another 70 points higher on that 8:30 a.m. CPI number. NASDAQ 100, how about 1.73% in the positive, 359 points, trading at 21,279. The Dow up 1.6 or 668 points, trading at 43,421. And you get the Russell, very rate sensitive, the Russell 2000 up 2.5% or 56 points, trading at 2288. Bitcoin up almost $2,700. Crude sitting above $78 at $78.23, up by 73 cents. Now we jump over to yields, dollar, commodities. There's a move for you. Okay, you got the 10-year up by 26 ticks. You're talking about a yield of 4.67. We're down by 12 basis points in the 10-year. You take a look at the 10-year on a longer term basis. You see the area we've been bumping up against, okay? Now, remarkably, that was at about 7:30 a.m. this morning. I was notating these charts about 7 a.m. this morning, sending out the newsletter. And yeah, 4.76, just like that, we're at 4.66, okay? But you see the area that we bounced at, okay? The lows from April, this is the 10-year again, 107.04. We hit 107.06, that low on Monday. Almost made that low on Tuesday. We're catching a little bit of a bid. You jump over to the dollar, DXY. Just like that. We break through 109. We reach 110. You break through 109. We're at 108.76 right now. Longer term basis, it's one red bar, to put it lightly. We'll see if this holds. Nonetheless, the market reacting to the inflation numbers this morning. Yields down 12 basis points. The dollar at 108.75. Equities trading higher on the premise that maybe we will get a cut or two later in the year. Now, we have a Fed 2 weeks from today, which will be interesting. Okay, March 29th, you have the Fed, ends their two-day meeting. All expectations are that they'll stay where they are. And let's jump over to that CME Fed Watch tool, see what kind of a reaction we're getting this morning on the inflation data. Yeah, identical odds of the coming meetings. Things get more interesting when you go out to July, September, October, etc. July now. We were looking at these yesterday. I think you had to get to July just to tip the balance to 4 to 4.25. You go out to December, and that 2 cuts, a much bigger percentage than it was. The market now expecting 1 to 2 cuts this year. We were maybe saying 0 to 1 cuts. So that's the reaction. You're seeing it in yields. You're seeing it in equities. And let's get into the numbers. Core inflation, month over month, 0.2%. The market was looking for 0.3%, okay? 12-month core, 3.2%, will come down unexpectedly. First drop since July, okay? Now, these are the headlines as it hit. Energy, the biggest culprit for the headline gain, accounting for 40% of the monthly all items increase. Energy, okay? But energy is not in the core number that their Fed much prefers core. Keep in mind that they do prefer the PCE versus the CPI. But nonetheless, you have a soft CPI number. Not completely surprising, okay, as in the number was supposed to be 0.3%. 32 of 71 forecasters put it at 0.2%. Not out of the realm. No huge reaction when you got almost half of forecasters forecasting where the core CPI comes in. Okay, nonetheless, you have bonds trading lower in yield, higher in price. Markets react to the positive, to put it lightly. We get the opening bell coming up in 19 minutes. We'll see if we go from there. Is interesting, though, how things get phrased. Inflation rises again, hitting 2.9% in December. That's how the Journal puts it, right on the front page. Ticks up again. Okay, and yeah, when you're looking at when you're looking at headline, that's what they're talking about, okay? Headline ticking up, but that's because we've been dealing with crude at $70. Look at that core number. Can't deny that the purple there is a lower low, lower high trend to lower prices, and we'll see where we go from there. But nonetheless, those numbers out. We're going to digest them when we come up on the open. Shelter costs up 0.26%, the smallest bump in 3 months. Owner's equivalent rent up 0.31%, actually an acceleration. Rent 0.31% versus 0.21% in November. Softer than we've seen for post-COVID is what they're talking about. 12-month basis, airfares, 7.9%. People are flying, man. Those airlines, there's a reason why those airline stocks are through the roof. 3-month core CPI. Now, this is a big one. I saw this when it came out. 3-month core CPI, okay, is running at an annualized rate of 3.3% in December. That is down from 3.7% the previous month, okay? Now, that is quite a drop over a 30-day period for a 3-month annualized rate. The trend is your friend on that one for sure. If that continues, yeah, they talk about shelter, and we talk about, of course, rate sensitivity. Food costs on acceleration. Remember what we were talking about in PPI. You know what was shown in PPI, folks? Vegetables, decrease of 15%. Go out there and eat some veggies, man. Eggs, yeah, still dealing with that bird flu, up 36.8% over 12 months. Eggs are so healthy, too. That's a bummer when you see something so healthy going up in such a dramatic price. Very prone, of course, to those bird flus that rip through. Man, look at these numbers, though. Essential services, motor vehicle insurance, up 11.3%. Education, up 4%. Medical care, up by 2.8%. Yeah. Even as the disinflation narrative took hold, living costs continue to push higher. Right? Insurance, all that stuff. All right. We jump back to the market. S&P's up 80 right now, and we got JP Morgan, we got Wells Fargo, we got bank earnings this morning. We're going to jump to that right after the break. You take a look at JP Morgan, up about $4 in the pre-market on their numbers. You spiked to almost 257. We're at 251 from a close at 247. You jump over to Wells Fargo shares this morning to 74 from 71, up on their earnings as well. Stay tuned, folks. We got a lot to talk about. We'll be right back after the break. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We have markets digesting a soft CPI number, inflation, a little bit lighter on the core number for CPI than the market was anticipating. Yields pull back. The dollar pulls back as well. Equities rejoice. We're trading higher. S&P's up by 1.4% in the pre-market. NASDAQ 100 up by 1.6. The Dow up by 1.6. And the Russell up by 2.4. So we kick off earnings season, and we got winners across the board. JP Morgan, we're up by about $3. I'm going to jump through them all, and then we'll go back to some of the details. Wells Fargo, trading up about $3 to $74 right now. You got Citi out with their numbers, trading up by almost $3.50 to $77 right now. Goldman Sachs out with their numbers, trading from $571 to $594. BlackRock, man, you talk about some numbers. BlackRock from $963 up to $1,000. Now, boy, when you hear the numbers, you look at BlackRock. Up from $811 to $963, okay? It's been a decent year, but not compared to some of the runs that you've had across the board for some of the others. Nonetheless, let's get into some of the numbers because they are almost video game style numbers. JP Morgan, how about $14 billion of profit in 90 days? Non-interest expenses falling 7%, profit rising 50%, revenue $43.74 billion, profit $14 billion in the quarter. Revenue climbing 10%. How about net interest income of $23.5 billion, $400 million the market was looking for. Fixed income trading revenue jumping 20% to $5 billion, just staggering numbers. Okay, so they make $14 billion, and check it out, right? They're taking, I mean, what is that? That's almost, what, 26%, something like that, right? $4 billion, 30%. Talk about margins, man. $14 billion on $43.7 billion in revenue in 90 days for JP Morgan. You jump over to Citi. Fourth quarter net income, almost $3 billion. An improvement from a loss of $1.8 billion a year ago. Yeah, $20 billion stock buyback. Revenue, barely a beat. Earnings, they beat as well. Net income of 2.86. So you have JP Morgan makes $14 billion. Citi makes $3 billion. Wells Fargo has net income of $5 billion on 20.38. Light on revenue. They beat on earnings. Yeah, look at that, man. Wells Fargo said they expect this year's net interest income to be 1% to 3% higher than last year's number of $47.7 billion. Remarkable, okay? So again, JP Morgan makes $14 billion, right? Citi, they make $3 billion. Wells Fargo, they make $5 billion. Goldman Sachs, profit nearly doubled from a year earlier to $4.11 billion on revenue of 13.8. You jump over to BlackRock. How about assets of 11.6 trillion? They've added $1.5 trillion in assets in the last year. Remarkable growth. Net income. Yeah, remarkable. 1.67 billion. Just staggering. 11.6. The assets that they added, I was reading about this morning, just recently. That puts it in context. The last year alone. It's everywhere. I'll pull up this. We're going to talk about BlackRock. I think I had it up on Bloomberg earlier in terms of just the massive size. Just remarkable. Taking a look at the massive size that you're talking about. I think it was. We'll try and find it. Yeah, big numbers across the board. So what is there not to like, right? It is remarkable. You look at those types of numbers and you hear a lot about regulations, stifling banks, et cetera, the need to lighten regulations on banks. And looking at those numbers, JP Morgan making $14 billion on $43 billion of revenue. Now, they're the ones that reap the rewards of some of those smaller banks that made their mistakes, Silicon Valley, First Republic, et cetera. But nonetheless, staggering numbers across the board. All the banks trading higher. It's going to be a strong opening for the financials. You combine that with the CPI numbers we got this morning being soft. Markets to the moon. We'll see where we open. But yeah, we got a lot of momentum, and follow yields because that is a big one as well. You jump over to how the Journal puts it, and yeah, you got to look at those, right? Slight uptick in the overall, but energy, a huge component there, pushing that up. You focus on core, and you're looking at a number that's 3.2%. That's below the 3.3% that the market was expecting there, and you're at a 0.2% number monthly versus 0.3%. They talk about earnings in here as well. But yeah, we got a Fed 2 weeks from today. And I imagine that he's going to be talking about being data dependent, but it is interesting that we have 3 full trading days today, Thursday, Friday. We come into a long weekend, closed for Martin Luther King on Monday, Inauguration Day happening to fall on the same day. And so, yeah, we're going to come back on Tuesday after the long weekend, and I imagine there is going to be some reality versus rhetoric in terms of what those tariffs look like, what some of the landscape looks like in the coming administration as we get some executive orders. Day one, we've been talking about President Trump's been talking about being a dictator on day one. We're going to find out where things go. His words, not mine. We'll see. S&P's up by 82. We're going to find out a lot no matter what. So it's going to be interesting to see how the market reacts to actually some of the policies that are going to be in place after this weekend, which is remarkable when you think about policy shifts. The market's being prepared for them, but there is unknown volatility in that market as we come into that. We keep our eye on the dollar. We're going to talk to our man Teddy Kegstad at 40 past the hour. We always got some good action on Wednesdays. We got some action today as the dollar weakens to 108.69. We keep our eye on yields right now, up to 108.07. And you're talking about a 10-year at 4.66. And that, of course, helping gold. Remarkable how well gold has held up in the face of dollar strength, folks. Put it on your chart, okay? Let's just zoom it in. September 27th, That's when the dollar was at 100. We saw the dollar go from 100 to 110, and all that happened for gold is you started at 2,700 and we oscillated by $100 on each side to 26 to 28 to 2750 to 26 to 2,700, and now what's happening is we've had the dollar weaken to 108 and change. You have gold at 2713, and we'll see where we go. We're going to need a lot more data that lines up with the data that we've gotten for a trend to change, but a little bit of a reprieve gives Chairman Powell probably a little bit of room to say things are going well, right? Unemployment's at 4.1%, and core inflation continues to come down. Why would they do anything? Tough to argue with that. All right, folks, we got the S&Ps up by 83, NASDAQ 100 up by 348. This market going to digest those CPI numbers. We're going to digest strong bank earnings kicking off the season as well this morning. Stay tuned, folks. We're coming back in 3 minutes for the opening bell.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. S&Ps kick things off up 1.4 points. You spiked to 59.79. We're trading at 59.64, 1.4% in the positive, 82 points. NASDAQ 100, we're up by 1.5%, up 325 points, 21,248. The Dow up 1.4%, 617 points in the green, 43,366. And how about the Russell? up by 2.5% or 55 points in the green, 22.87. And yeah, let's jump over to that dollar. 108.64, and as I mentioned, next segment, talking Norman Teddy Cakes at. We'll talk some good commodities, some currencies. Always a good day. Let's check out the banks. JP Morgan up 1.5% right now. Citi up by 3.8% right now. Wells Fargo up by 5.6%. Check that one out. Goldman Sachs up by 4.2%. BlackRock 5.3%. All right, forgive me, jumping around. Just looking for one particular article. I can't find that one I had this morning. I'll talk about it. It's just BlackRock numbers. Absolutely remarkable, the amount of money they continue to add. That dwarfs some money managers out there that are, not BlackRock, but huge in their own right. Yeah, $11.55 trillion in assets from $10 trillion a year earlier. I mean, just in the last year, they have $1.5 trillion increasing their assets. And I'm talking about just new assets, not the way they've grown assets as well. Yeah, they got acquisitions out there. A majority of long-term inflows captured by exchange-traded funds at 142.6 billion clients poured 23.8 billion into fixed income products. Their Bitcoin ETF is pushing about 50 billion. There you go. All right, we talk some other news out there. This one out from CNBC talking Disney, and yeah, they had quite a strong finish to the year. How about full ticket sales? Down 3.4% from 2023. This is full year ticket sales, 8.74 billion. And yeah, far cry from nearly 27% shortage seen at the midway point of 2024. So they were only down 3% from 2023, but still down 3%, right? Disney, 25% of the total domestic market. Now, they had some big winners at the end of the year. Moana 2, Deadpool and Wolverine. Wicked was Universal's out there. Yeah, look at these numbers, though. This says it all, man. Look at these numbers. Okay, things have changed in that business. Doesn't mean you can't still build blockbusters, right? The last 2 years, we're averaging $8.85 billion. But you're talking about down 30% from where we were pre-COVID. 2019 was a gangbuster year for Disney. Yeah, Inside Out 2. I forget that one. How do I forget that, right? $665 million. Inside Out 2. I mean, look at that. Between Inside Out 2 and Moana, $1 billion. And then you got Despicable Me 4. I haven't checked out Beetlejuice yet. That's one of my favorite movies growing up. Dune 2. I tried to watch Dune 1. Couldn't quite handle it, man. Twisters. That pops up. I think it's on Netflix every so often. Maybe I should watch that at some point. I like the original, but can't quite get into it. And Godzilla vs. Kong. Yeah, that's a good one. We've watched a little bit of that. Tommy enjoys that one a little bit, as long as it doesn't get too serious. But Inside Out 2, we haven't gotten him into that one just yet. But yeah, things have changed, and maybe there's certain movies, certain themes, maybe they can turn that around. Big budget movie theaters in maybe those Class A malls, whatever it is. But tough to deny that you're going back, right? 2014 at $10.4 billion, and we're almost a solid $2 billion off that number in 10 years later. You know, everybody knows that you can just wait to a certain degree. It's got to be a big movie to see it in the theater. Deadpool and Wolverine, yeah, I just waited, watched it at home. Not the same experience, but I think it came out on Disney like 30 or 60 days later. What am I paying for Disney Plus? Why do I got to pay, and the theater is something, but it's going to be those big theater movies that'll really make it worthwhile. Something like an Oppenheimer. I wish I had seen Oppenheimer in the theater. I really wanted to. Maybe it'll come out. I'll go see it at the theater to get the full experience. But yeah, we got a theater in Lakeland. Beautiful theater, decent mall. and it seems like it's always empty. Never a big crowd over there. Not like I'm going there all the time, but we go there for, some of the stores in the area. It's right by the Target I always talk about. Nothing even close to the crowds that you could expect at certain areas. All right, market holding on to those gains pretty well. NASDAQ up more than 1.5%. You jump over to Amazon, up by 2.2%. There's a pop for you. Apple shares up by 1.6%. Microsoft shares this morning, 1.5 to the positive. Google shares, 1.7%. NVIDIA. NVDA. Ooh, look at that. A little bit of a give back on the open. What's up there? Watch out for NVIDIA. Quite the pullback from the high of 153 made just 8 days ago. We're trading at 132, and you can't even catch a bid on today, which is remarkable. Salesforce up by 0.6%. We jump from some retail. Walmart up 0.7. Target shares up by 2.2%. Kohl's shares. Man, that's a tough one. Stay away from Kohl's right now, folks, until something happens. Maybe they'll be around, but they're closing stores, and this chart is just ugly on any level you look at it. Look at that weekly, right? You could argue that you were looking for a low all the way back into June of 2022. And since then, it's been lower lows, lower highs. You thought you got a reprieve at the beginning of this year, and just like that, you trade from 29 to 12, and it's been basically a straight slide to lower prices. You're up by 1.8% today for Kohl's. You compare that with a chart like TJ Maxx, straight upward prices across the board. Today, you're flat, though. S&P's up by 75 right now. Let's check back in on gold. A little bit of a pullback just then, right? Yeah, look at that one. We were just talking about this at the open, trading at 27.13. A little bit of a give back. We see what's going on in yields right now. Now, holding well at 108.08. Check in on the dollar. Yeah, slight pop. 108.73 right now on the dollar, with the S&P's up by 73. And the banks give it back slightly, but still holding on to. Ooh, look at that. JP Morgan actually has gone slightly positive. You want to talk about expectations, man. Just talked about it. JP Morgan took in, $43.7 billion, took $14 billion to the bottom line, and you're flat. Whew. Talk about expectations. Bank of America up by 2.6%, Citi up by 4%, Wells Fargo up by 4% as well, and then BlackRock, man, up by 4% at 1,000 on the dot. All right, folks, S&P's up by 73. Markets trading positive on that light PPI number. And we're going to be coming back with our man Teddy Kegstat. Folks, go check him out. We got a 3-minute break under the newsletter tab, the Tiger Forex Report, outstanding report Teddy puts out every Monday. You can sign up with the 30-day money-back guarantee, and you can be signed up reading that letter by the time we come back here and we talk to our man Teddy. Stay tuned, folks. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets in positive territory. S&P's up by an even 1.5% right now. You have the dollar pulling back. DXY trading at 108.74. And right now, folks, we're going to talk to our man Teddy Kegstad, as we do every Wednesday at 40 past the hour. You can head on over to the front page of TFNN. As I mentioned, right under the newsletter tab, the Tiger Forex Report. You hit subscribe. It's $97. You got a 30-day money-back guarantee. You gain access to the archive webinars, new report every Monday, updates throughout the week, and don't forget about under the services tab, Teddy's got a couple of outstanding webinars, folks, only $97. And if you're into options in any way, capitalizing on time with calendar stock option spreads, and then Japanese candlestick pattern stock and option strategies. Check those out on the services tab. Teddy Kegstad, good morning.
Good morning, Tommy.
So I feel like I always kick off these interviews that, man, we got an interesting day going on in the markets, but we do. CPI number, the headline there, the core, a little soft, I should say. The market's reacting. What do you think about the reaction? We have yields pulling back, a little dollar weakness. Maybe we kick it off with just this morning's reaction to that number.
Yeah, I think today's number, we've had a little pullback in the dollar and on yields. Over Monday and Tuesday, they were pressing the new highs and lows and kind of just really not by very much. I think the number today gave them a reason to take some profits off the table. To be quite honest with you, I'm not surprised that the CPI came out a little softer. I mean, if you remember, it's a lagging indicator to begin with. So if you remember from mid-September into mid-November, we had a retraction in energy prices, gas prices, even food, But then what happened right before Thanksgiving? A dozen eggs went from $2.50 back up to $7.50. So I mean, we had a big spike in inflation, during the holidays. It kind of subsided a little bit once we got to Christmas going into the new year, but not by very much. So I think that this was just a reason, the trend has been really pushing on when it comes to yields and the dollar. So this gave them a reason to kind of, take a little money off the table because we're due. From the Tiger Forex Report, our projected future trend channel for the dollar index, Monday we made a little bit higher high, and that just bridged the upper band of the channel, and now we're coming back towards, the central median line today. I like it. I think that unless the dollar index falls below 107.48, which would be a pretty significant drop over the next couple of days, I don't see it being very much more going on as far as the pullback. I think we might still test the lows a little bit with the dollar index, and also meaning yields getting a little bit more of a rally and dollar pullback versus most of the currency pairs. But I'd be very cautious with it. I don't think you're going to have, I think the bulk of the move has basically occurred from Monday into today already.
So is this a market that you're having some patience at these levels, or do you like the, and I know the trend has been there for sure, and tough to deny. I got just even the dollar. You're talking about higher highs, higher lows on this chart. Yes, we've pulled back a bit, but higher highs, higher lows. At these levels, is it a little patience? I mean, pretty interesting. It's Wednesday, Teddy, right? We come into another long weekend, which is the 4th out of 5 weeks. I was thinking about this, that we've had 4-day trading weeks, right? I don't know if that's ever happened before, only because you had to have a presidential day in the middle of the only time it happens 3 out of 5 weeks. You got Christmas, New Year's, and MLK. We're always a little, it feels front loaded in the year for our 3, but nonetheless, so we go away and then we come back and we have a new president. We have new policies. We have a new administration. Maybe we get some executive orders. How are you approaching that as a trader right now?
Exactly. Between the inauguration and the Fed, Tommy, that's really what you have to wait on now, because I think you're going to see, like I said, this was a good reason for a little profit taking. You might have a little bit more over the next couple of days, but I don't think you're going to press it. I think you're going to go sideways into Friday. I would be very cautious with the markets come Friday morning. I think you'll have an early move after the opening of the stock market, and by 9, 10 o'clock your time, 9 o'clock our time, I think that it's going to be done for the week. Everyone's going to wait. We got a 3-day weekend, and obviously we have inauguration day. You're going to have all kinds of executive orders that foreign markets will be open, banks will be closed, stock markets closed. So it'll be, I think the computers will be jumping that evening, come 5 o'clock. Our time, so 6 o'clock your time. I think once the Asian markets are up, that then you'll start to see some movement, and we'll see. I would think that right now we have the rally that's going on in crude oil. I think it's going to run out of gas once Monday happens, and then we'll see how many of these people are afraid of all these tariff talks. You know what? Here's a history lesson for you. There's only been 2 times in history, in the United States history, that we actually were aggressive with tariffs, doing something like this, which is actually meaning fair trade. It's completely is what it's all about, with no matter what country you're talking about. That's what tariffs are all about. And 2 times in U.S. history, we pushed back against countries who put tariffs on us and we didn't have them on them. We equalized them. Do you know what happened both times? We had upwards of 40% deflation.
Okay.
And over the course of 10 years, we had the biggest 2 growth periods that we've ever experienced in our history. Period. Bar none.
When were those around? I'm just curious.
First time it happened was around 1885 to 1895, and the second time was with Teddy Roosevelt around that time when he was president.
Nice.
So now that Reagan actually was the one time they started to come close to it, because he brought back the tariffs too, but he only got so much done. So all we're doing is repeating history, and if history repeats itself, then that means that the American consumer will be very, very happy a few years from now. You'll be seeing prices.
As traders,
seeing prices, yeah. And if it's traders,
I was just gonna say, as traders, man, it's just we got a period of, I think, some volatility, in my opinion, coming down the line, because you make some great points. There's obviously people on the other side, and the market is struggling a bit to figure out, let alone what the actual policies are going to be, right? And then the impact of what they may be. And we have the reports out there. We find out, and the fair trade deal, I try and think of things. I say it all the time. I think of it in Tommy's perspective, right? He's going to be 4 years old in almost a couple weeks, which is crazy. But is that a good thing 10 years, 20 years, 30 years down the line? Yeah, probably. Might we face a little short-time heat? Maybe, but we'll get to find out, man. Either way, which is pretty cool as traders.
We're already dealing with a lot of pain right now, though, Tommy.
Say it again for me.
I said we're already dealing with so much pain right now. How much?
No, listen, on the China deal, man. When you start thinking in decades, man, and that's how you think. If you got a young kid, you should, that. Yeah, you better believe that we better keep China in line, man, because they're coming for his lunch, right? Totally.
Right. And here's something. One thing to think about. Commodity traders will remember this the most, because all commodities, especially when you have big bull run-ups, what happens to them eventually? They pull back. You don't have prices that go skyrocketing in raw commodities, even food sectors, forever.
Right? Yeah.
If they go up, eventually they come back down. So this could be the situation where we can see all of a sudden you're going to see commodity prices tank over the next couple of years.
Okay. Yeah, that commodity market, it's just simple supply demand, right? The prices get high, they start driving up the supply, et cetera. You get the rotation, whatever it is, across the board, and eventually. Can you hang with us for one more segment, Teddy?
Sure.
Okay, perfect. Maybe we'll talk some selective currencies. We'll take a look at some more, folks. Stay tuned. We got one more segment. We'll come back. We'll talk with our man Teddy Kegstad. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets even trading above where we were. You're making session highs. We're up by 1.6% in the S&P futures right now. NASDAQ 100, we're up by 1.9%. Quite a market, Teddy. What do you think, man? What do you think about these equities at these price levels on the reaction?
I like them, and also I think earnings, you were talking about the bank stuff earlier before I came on, right? And, everyone, especially around the new year, like, what do you think about the market? And I'm like, you know what? I give the same answer all the time. As long as earnings are strong, the market's going to be firm, period.
And, man, these earnings, the last couple of years, they just crush it across the board. Banks kick it off, take in all the money, and then the tech stocks have delivered, and nothing seems to be changing. I agree.
But the margins are getting a little choky. So that's the thing you got to worry about, how these earnings are really holding up.
those JP Morgan, just remarkable numbers for JP Morgan. And let's see, they almost gave it up. They're up by 0.5%. Talk about expectations sky high.
Well, that supports what we've talked about for months now. Remember, I said once they started, the yields have been firm and the banks are getting the money for less. They got to make more money, right?
Totally. Just these charts, mammoth accelerations. Now they got to live up to it, man. JP Morgan, you're talking about $100 2 years ago. You're talking about 140 just over a year ago, and you're pushing 250 for the bank of banks out there. The dollar, Teddy, I just want to ask you, in general, dollar, of course, we've talked about it extensively. The DXY, you hit 110, we're at 108.50. We've talked about different banks out there, central banks. Are there any currencies that jump out to you? Because we've talked about that basket before, but I know we've talked about the individual currencies, and, we got about 30 seconds left, unfortunately. But any of those currencies you want to mention that kind of jump out? I know you're watching so many of them.
Yeah, Euro US dollar is going to parity.
Say that one, Euro? Oh, it's going to
Euro US dollar is going to parity.
I was looking at it before. There you go, folks. I love it, Teddy. So much great actionable information, man. I appreciate it as always. Have a great week, and we'll talk to you when we got some new policies in line next Wednesday, man. Thanks, Teddy. Have a great one.
You're welcome.
Folks,
Take care.
Stay tuned. We got our man Basil Chapman. He's coming up next. Live programming today. And we got a market, folks. Stay tuned for Basil, Steve Rhodes, Larry Pesavento, Jacob Shoup, Fast Market. Have a great one, folks.